over 111 billion property transactions happened in 2023 alone. In the apartments, villas, commercial and plot sector, this exceeded the year before by 55%, and that was just in 2023. We're yet to see another increase in Dubai's property market once again in 2024. So that begs the question, should you be investing in this market? Is it the right time? How to do it? What's going on? Well, I'm going to answer as many questions as possible today. I'm going to give you the ultimate guide on how to strategically invest in 2024 in the Dubai market. What's going on, guys? My name is Joe Butler, and as always, I am bringing you the most informative real estate content in the heart of Dubai. If you're an investor looking to make a strategic investment with careful guidance from start to finish, then click below, book a call, and I'll see you there, and we can talk how we can help you invest in the Dubai property market. So the first thing we're going to cover, because I'm sure you're aware, if you've started looking into the Dubai real estate market, it's extremely overwhelming. There's so many choices to choose from. The main two categories of investing in the residential sector are ready properties and off-plan properties. We'll start with off-plan because it is well known to be one of the most transacting right now. Why is that? Well, we'll discuss that later. So firstly, off-plan is buying a property from a developer pre-development. This is a very lucrative market in Dubai because it gives investors the chance to get in at entry price, but it also gives investors the chance to be on a payment plan which can be paid off without the need of getting a mortgage. So, for example, if something is 1 million dirhams, investors usually get the choice to pay between 50 and 70% during construction and 30% or 50% on handover. It really depends. There is not one payment plan for all developers. Every single one is different. But the idea is that you pay the payment plan off accordingly to what the developer sets, and you never pay a penny in mortgages. So long as you don't miss the payments and you don't incur any penalties, then you'll be good to go. Now, off-plan is well known to becoming a lot more frequent and a lot more interesting for overseas investors. Whether or not that's for you, well, by the end of the video, you should have an idea whether it is for you or not. And then we've got the other type of investing, the ready properties. Okay, so if you come to Dubai and you look around, there are plenty of ready properties to choose from. But as an overseas investor, you've got a couple of options, whether to take mortgages or whether to pay in cash. But the idea is that you're buying into a ready property that you can start generating money from straight away. And that's the biggest difference between off-plan and ready. Off-plan, you can't really generate any money from it while it's being constructed, but you are going to be gaining appreciation. And then with the ready properties, you can be making money straight away and capitalizing on a very touristic market and getting your rental income straight away. However, we've seen the market increase drastically over the last couple of years, and therefore it's not the easiest to find an incredible deal anymore unless you're working with someone who can get access to them, like myself. Okay, so they are the main two ways to buy property, whether that's off-plan or ready. So I'm going to go over investment strategies now, because this is what I find the most important. So we'll start with off-plan. A lot of people come to me and they're presented with different ideas about what they want to do with the property. The first one, which is pretty common, is off-plan flipping, which is the process of purchasing off-plan and flipping it once it's completed or near to completion. We've seen investors make a lot of money from this in the past. And of course, what I say to people is just don't have high expectations of trying to sell it too far after you've bought it. Now, I say this to most investors because people get sold on the dream that you can buy off plan and flip it 6 months later. Unfortunately, that's not as lucrative as it was anymore because there is an abundance of choice on the market for investors to choose from. So why would they pay a premium from yourself when they can just obviously go to the developer themselves? Now, we do see it very, very little, but not so often anymore. And that's when a project comes to the market that is incredibly in demand. Two examples of this, we had the DIFC Living, which was a very unique building that was built in DIFC. And of course, DIFC is a very, very nice area to be living in, of course, because of all the nightlife and the fact that it's the financial district of Dubai. But then the other project that we were talking about is the Palm Jebel Ali. We've seen investors flip them pretty much 2 days, 3 days after they purchased a property on the Palm Jebel Ali, which isn't even set to be really done until around 2026 and 7. So you can already see there are some properties which create scarcity, and therefore investors who missed out will be willing to buy them potentially a week after, potentially a month or 6 months after. But if you are looking at purchasing a property with the intentions of flipping it within the first 6 months or even 1 year, assuming it's ready in 2 or 3 years, I would not think about selling it until it is completed or at least almost to completion, because that's where you're going to benefit the most. All right, you've already purchased off plan, so why not wait until it's almost ready to capitalize the most? That's what I say to everybody. Okay, so then we've also got off plan, where you hold it, you keep it, and you Airbnb or rent it out. The reason I like this is because I've seen a steady growth over the past couple of years with rental increase going up very much. Now, if you bought off plan at the right time, or even even still buying it today, you can maybe expect appreciation of 5 to 10% per year. And also, according to the rental rates, which are set to go up once again, you can be benefiting from a much higher ROI by the time it's ready. So if a rental for a one bed generates in the area that you've bought a property 6% with today's rental rate, well, in 2 or 3 years, that area could have gone up again. And then by the time the property's ready, you've bought it pre-development, your ROI could be easily 10, even up to 15. In some cases, we've seen 20 to 25% ROI. That was generally the lucky buyers that got in before COVID, but still, you can definitely benefit from a higher ROI when you buy off plan if you buy it for the right price in the right location. And the third strategy with off plan is obviously waiting until it's ready and then actually taking a mortgage out against the property when it is completed, releasing the equity, using that equity and reinvesting it. I like this idea because it allows you then to obviously wait until the property's ready. Let's say you've waited 2 or 3 years, take the equity out, purchase another property, and rather than just have one property, now you've got 2. So now you're getting 2 incomes, paying 1 mortgage off, one of the properties is paid off, okay? So you see what I'm saying? So that's how I would structure any type of off-plan deal, but it all depends on the investor, and that's where we would have a chat. Now, with the ready market, obviously we've got a couple of different avenues. If you've watched any of my previous videos, then you see that, there are opportunities to actually buy and flip properties in Dubai. So this kind of works a lot better in the small townhouse or villa market, just because there are quite a few apartments coming to the market in the near future, but also the fact that a lot of apartments, even if they are in an amazing location, if the building quality is not that great or the building doesn't offer, brand new amenities where people can have a nice gym, sauna, steam, good pool, whether or not it's got a communal space for the people living there. If the building's not that up to scratch, the apartment is never going to be valued too high. So therefore, the ROI on the flip may not be that great. Now, the other avenue, aside from the flipping, you could actually renovate a property and put it on Airbnb. So, for example, if you're purchasing a property in one of the main areas, such as the Marina, JLT, you've got downtown, or all of these other thriving places for Airbnb, you could easily go in there, spend maybe $20,000, $30,000 on the property, or even more, or even less, depends on the level of renovations you want to do. And then you can actually rent it out on short-term rental, and benefit from the fact that you're probably one of the only people in that building who's got a nice unit, suggesting that the property is in a fantastic location, potentially near the beach or near the Burj Khalifa. Then this can be very profitable. And then of course you've just got the traditional ready property, buy it, move into it, or you can rent it out long term, or again you can just buy it ready to rent out Airbnb. So these are the different methods of investing from off plan to ready. So let's talk mortgages. As a resident, you are going to be eligible from 70 to 80%. The reason why it's 70 or 80 depends on the value of the property that you're purchasing. Now, for a mortgage, it's pretty simple. If you already live here and you're on a salary, then it's very simple. You go to the bank, and I like the fact that the banks do favor lending out a lot more money here than we've seen in other countries. And also the fact that we can turn around the process within like 2-3 weeks of the day that you apply for your pre-approval to the day that we can start negotiating on offers. Now, from when you get the mortgage to when we actually make the sale, we've seen properties transfer within between 4 and 8 weeks, but generally it's not going to be 3 to 5 to 6 months like we've seen in the UK, for example. It's a pretty fast process. Of course, you can also buy a property cash, and if the seller does not have a mortgage on the property, well, then we can transfer the property within a week. We've seen that happen too. So there are different options for that. But if you are a non-resident and you are looking to potentially get a mortgage, I would not advise getting a non-residency mortgage unless you are in the market to flip a property. And I say that because the interest rates are naturally going to be higher because they don't know anything about you, so they've got to build a profile, and we've seen interest rates around 7 or 8%. Now, if you are looking to take out a non-residency mortgage to actually rent out a property for a profit, like I said, the terms and conditions, they're not the best. However, we have seen it work well for the flips, and you might be wondering, well, how much will I be eligible for? And again, that depends. Rather than 70 to 80%, you could potentially be looking from 50 to 60%. So that's the amount of money you can lend as a non-resident if you are looking to purchase a property in Dubai to get a mortgage. But as I said, I wouldn't really advise it if you're looking for the ROI perspective. I'd rather you go and look for something off plan on a good payment plan, potentially with a post handover payment plan. We don't see many of them, but when they do come around, they are good and the properties snap up very quickly. And I'll just tell you what a post handover payment plan is. It's essentially when you purchase a property off plan and the developer offers you to pay, say, 50% of the remaining property's value over 3 years after it's completed, assuming it's ready in 2 years, well, then you'd be paying off the property over 5 years. And we've actually seen tenants pay off that second half of the rent, or at least get close to paying it off. So the price you actually pay for the property is actually not that large, which, you know, that can be very favorable. But as I said, if something does come to the market, they generally sell out very fast. We've seen projects sell out in a number of days because not many developers are offering these favorable payment plans so much more. Simply put it, because there are so many buyers in the market. Okay, so the last point I'm going to cover in this video is going to be the fees. You're probably wondering, well, what are the fees when you purchase a property? Well, to start with, Dubai does take a 4% Dubai Land Department charge, which is essentially a government tax when you buy a property. And that's going to be whatever you buy, whether you buy ready or whether you buy off plan or whether you buy plots, whatever it is, the Dubai Land Department will be asking for a 4% Dubai Land Department charge. And then if you are buying in the ready market, you will also be paying your broker 2% commission. And then you will also be paying some small conveyancing fees and some trustee fees. The conveyancing is essentially like legal fees. It's like having a solicitor in Dubai. They're going to do all the legal paperwork, all the transfer and ownerships of the property. That can range between 5 and 10,000 dirhams depending on the property value. And then generally that's pretty much it. You just maybe pay some small bank charges when you go for the mortgage. So that is the fee structure. And then if you are purchasing off plan, well, you're only going to be paying 4% Dubai Land Department charge again. Plus you will be paying a small admin fee depending on the developer. Some developers charge 2,000, some developers charge 10,000. It really depends, but generally they're the only fees that are going to incur there. So just to wrap that up, we spoke about the types of property, off plan and ready. We've talked about the strategies, off plan flipping, off plan holding and renting out, and then you've got off plan remortgage, and then you've also got ready properties where you can buy and then just generally rent out straight away. You can buy and flip, or you can buy, renovate and actually rent out short term. And then of course we've spoke about the mortgages and the fee structure. So that is all I want to say, guys, in this video about your guide to investing in Dubai. In 2024, it's pretty much still the same as it was in 2023, but there are many new opportunities on the market now. But I do want to note that there are also very overpriced properties, in my opinion, in certain areas, and that is why you need an expert to help you and guide you on how to find the best property deal that will suit what you want to do in this market today. Because I don't want you to go away, try and find it out on yourself. You're paying 30% above the market value, and if the market was to slow down a little bit and then you lose that 30%, you're going to end up really not thinking that Dubai was a good place to invest. Whereas I know Dubai is a very good and very strong economy right now, and therefore you're just lacking the right guidance to find a right property for yourself. So if you want to know any more information, follow the link below. Let's take a call and let's see what we can do.